reminder that we love questions from the audience, so you can start commenting your questions now, or you can also add them as we go. I'll be right back on to welcome our guests to the show. Thanks for meeting us for coffee. Good morning, everybody. Thank you so much for being here for the Meet Me for Coffee podcast. I'm your host, Samantha Jones, and really excited for this conversation today. Getting a little bit outside of my usual bubble. I'm going to have a conversation around international trade, ocean shipping, things that I definitely appreciate and try to keep up with, but it's just not part of my everyday. So if you're like me, hopefully this will be really informative and insightful for us. And if you are in international trade and ocean shipping and logistics, then hopefully this is really applicable for you today. There's a new feature on my podcasting platform. We can have polls now. So producer Aaron put up a question for us today, and I need to know if we're drinking hot or iced coffee today. Your answer is both insightful to your coffee taste and also helps us test this new poll feature. So we really appreciate you. This will be the easiest poll you do. It's a lot easier than the government politic polls that you get texts for. So jump in the chat and let us know. I'm going to comment. We'll see if you guys can see my comment, but I am having hot coffee today. But, it's like it is now that it's warming up in the summer. I tend to want the iced coffee. So we'll see. Okay. Without further ado, I'm going to go ahead and bring in my guest because we have no conferences to talk about. I have nothing on my schedule coming up. However, I think Andrew was just at a conference not too long ago, so I'll bring him in. I'll let him introduce himself, and maybe he can tell us. Andrew, were you at TPM recently?
I was at TPM out in Long Beach and had a great time as always. Good to see you.
Awesome. Very cool. Well, yes, I saw a lot of people attended that one. It looked like a great event as always. I'm still not doing traveling back from, still kind of like pseudo maternity leave right now, but that one has always been at the exact same time as another conference that I attend. So I've always just had to watch from afar and never actually be able to attend. Well, Andrew, thank you so much for being here this morning. I would love it if you could introduce yourself. Tell us a little more about you and your background, and then your company as well.
Yeah, glad to. And thanks again for having me. It's, a real pleasure to be here. And yeah, TPM feels like almost like a reunion every year. It's kind of the feeling of it. So my name is Andrew Petrisin, the founder of a company called Laneway. As some background, prior to Laneway, I worked both at the National Economic Council at the White House and the previous administration, as well as USDOT for Secretary Pete Buttigieg. So was on what we call essentially the Supply Chain Disruption Task Force. So, managed everything from West Coast port congestion to responding to the Key Bridge collapse in Baltimore, baby formula shortage, East Coast port strike. So that was kind of, half of the role, if you will. It was kind of, responding to things that were of kind of national economic or health importance. And was able to actually, be able to work for obvious reasons with a lot of the parties in ocean shipping, be it the carriers, the kind of U.S. importers and exporters, forwarders, and U.S. container ports in particular. The other half of that job, while I was at DOT, built what I believe to be, really the kind of world's first kind of public-private partnership around freight data sharing. So we at DOT on a voluntary basis actually collected. The carriers would send us kind of all their bookings coming into the U.S. As they were booked. The shippers were sending us their purchase orders, and the ports sending us their utilization kind of all daily. And we were aggregating that and actually turning it into kind of a demand forecast for the industry then to use as kind of a public data infrastructure. So, spent a number of years thinking about and working on kind of from a really, I thought, kind of unique macro perspective, some of the challenges in the industry that required getting all the parties kind of incentives aligned to kind of where they could all, benefit both kind of and we could benefit in the public sense as well. So, and prior to that, I've kind of always been in infrastructure and transportation. So did kind of contracting, procurement, financing for like big P3 infrastructure projects. So, and then moved up here to New York about a year ago, coming up on a year, which is exciting, and to build Laneway.
Awesome. And I was going to ask, that was going to be my next question. What is Laneway and kind of how did you have a really interesting background and an interesting experience. What a time to be, part of the government administration for supply chain during a global pandemic and everything that's followed. So what about those experiences and what about your observations drove you to start Laneway?
Yes, I think twofold. I mean, I think, so much of the experience, right? This was my first kind of experience in the public sector as well, was really about, how do we actually align the incentives, as I mentioned, between all these parties, right? This is such a complex and kind of complicated industry where you tend to have, it's like a lot of logical local decisions that can kind of aggregate into something that, feels illogical, right? Like the congestion. I remember early days, we were seeing congestion on the West Coast, and then everyone would move their cargo to, Charleston, and then Charleston would be congested, right? So there's this kind of, I don't know what to call it, lack of coordination in some ways, right? Where there's kind of data sharing involved that actually ends up hurting everyone, right? Because now everyone essentially can't get their, goods. So it's really kind of a mix of both of this kind of understanding of how do you do incentive alignment. And what it comes down to really is, at the end of the day, it's kind of supply and demand matching, right? And we looked at that at the federal government really at a macro level, right? Of how much volume do we have coming into the ports relative to the capacity for throughput? And, as, we would work on that, the thing we'd hear all the time was, these contracts, right? You have these freight contracts that don't really, they're kind of like a handshake agreement. No one necessarily needs to deliver either the kind of, cargo or the capacity. And that, right, in a much more operational way, in a much more commercial way, is also kind of a supply and demand matching exercise, right? How do we, both adhere to, right, and get the benefits of, right, kind of long-term annual service contracts, while at the same time, right, having the kind of flexibility to ship when you need to, and make sure at the same time, the carrier's assets remain utilized, right, because they need to, make money too. So it's, so much of the problems we saw at the federal level, Laneway in some ways is looking at that kind of core problem at a principal level and saying, okay, well, at an actual commercial level, like how do we start to tackle what the industry calls allocation, right? So basically, how do you allocate freight, on a given week, on a given ship?
Right. So as you started Laneway, you mentioned several problems here, like supply and demand, and you mentioned, allocation. And I was thinking about this when we were talking. I was how similar it kind of sounds to domestic freight markets, where we
Yeah.
have contract lanes, we have spot lanes, we have the supply and demand that we're always balancing. And when things are tight, it's more chaotic, and when capacity is loose, like prices respond. But I'm curious to know, explain a little bit more why, because we have all these visibility tools and we're trying all this data now in the domestic markets.
Yep.
What's different about international markets and ocean shipping in particular? Why do these problems continue to persist? What is that like challenge that we have that's creating this fuzziness, if you will, in allocation or capacity matching in the international space?
Yeah. So one, I just definitely plus up like, moving towards new technologies and visibility is all good, right? And I think, a lot of the visibility of the last decade was really focused on kind of where is your cargo, right? And then, then using that, right, kind of estimating, when it will be at the, next location. When we talk about allocation, we really talk about kind of in ocean shipping, like lift capacity, right? Like, do you actually have a slot on the ship for that week? And it's interesting when we spoke, and I, kind of as an inverse, don't know as much about domestic shipping. But really, what it comes down to is actually kind of an innovation, right? As we think about Laneway and kind of how freight is priced, right? And we talked about this, right? There's right now, right? You functionally have, and I'll speak to ocean, right? You have a base rate, and you have a BAF, which is your fuel cost, right? And the fuel cost is variable, and the base rate is fixed for the year. And when you ship, right, you pay essentially, not kind of at the point of booking, but later on. And the question to think about that I think is really interesting is there's two questions. One is kind of why was the fuel cost pulled out, right? So it used to be actually that the fuel cost was part of the fixed base rate. It was actually pulled out in 1974 after the oil crises. Because why? Because the cost is variable. It's highly variable, right? Just as like it has been the last month or two, right? And it kept breaking the contracts because you have a fixed cost, right? And when it went up, the carriers would essentially have to eat that cost, and it went down, right? The shippers are overpaying. So they basically pulled that out and they let it float, right, with the market, with the thesis being that, no one controls the global oil markets, right? Much less a given shipper or a given carrier. Let's essentially risk management, right? Let's kind of manage this risk and let that cost float. Here we are 50 years later and the contracts still break, right?
Right.
And the question is kind of why are they still breaking? And our thesis for the company really is that there's actually still a variable cost in the base rate that hasn't been pulled out yet. And it's actually the cost of the space, right? And what we mean by this is, when you look at your base rate, that's a fixed cost for the year that you negotiate with your carriage terms. There's actually two costs in there. There's the cost of the service, which we define as, the cost for an ocean carrier to move your TEU, plus their margin multiplied by a volume discount. And that's going to be the same whether it's, February or October before the holiday peak season, right? That's your port fee cost, your labor costs, things like that. But it's a lot more expensive to ship before holiday season. And it's not because the cost of the service has gone up for them. It's because the scarcity costs of the space has gone up. So there's actually kind of a hidden cost that basically isn't priced today. So what we're doing is actually like BAF, right? Like that fuel cost, pulling the cost of the space out.
Okay.
So you essentially lower the cost of the service, and you basically just buy the space as you need it. And the carrier basically prices the space. And we call that an allocation equivalent unit, which is a bit of a play on the TEU for container unit, obviously using allocation.
What happens if people are not pricing space? Like what? Because I
So
assume
today,
not everyone is, right? Like,
yeah, well,
I don't
no,
know.
yeah.
And currently, as of today, what does it look like? Like, what are the issues that have been created by not pricing this space?
Yeah, so today no one really prices the space. You could argue the spot market, right, has a kind of embedded price of the space. And we're really focused on the contract market in particular, so we don't
Sure.
really touch the spot market. What happens today is So let's say you're, I don't know, Nike and I'm Maersk, right? Or pick a shipper and carrier combination. We sign a contract for a year, right? And that base rate, right, is basically a function of volume, right? So what kind of more volume you give me, the lower the rate will be, plus, adjustments for particular terms and conditions. And you have an annual minimum quantity commitment, or an MQC. And let's say that's, 52,000 containers. What often happens today is basically you'll take that number and divide it by 52, the amount of weeks in the year, and you say, you kind of as a pro forma, right, get 1,000 slots a week. The reality is you as a shipper don't ship 1,000, containers a week, right? Sometimes you ship 1,500, sometimes you ship 500, sometimes you ship 2,000. Right, and that's happening across every contract. And what that means is it basically becomes a kind of giant over-the-counter negotiation, right, between all the parties for their space and for their allocation, which then involves essentially a lot of, maybe you get pushed to the spot, or there's rework, or there's some fee, or you're reopening the contract. And there's kind of all these essentially layers of patches that people do, right, to try to kind of fix it. When kind of our belief is that actually the underlying architecture of how you've priced your freight is outdated, right? And there's only so much you can do kind of with an old structure without pricing the space separately. I kind of have taken to saying, like, if you can't price it, you can't manage it, right? And until we actually price the space separately, we'll never actually be able to get our arms around the allocation problem in the industry. And it's something that, as I started thinking about building the business, almost universally, everyone I talked to basically just told me, we've been circling the drain on the allocation issue for 20 years and no one's really solved it. So,
Wow. What do you think? I guess I want to ask, based on that, like, you had these conversations. What do you think the receptivity is from, participants in this space, from the carriers? How do the carriers feel about this? Like, are they, why have they not created a solution, or are they trying to help drive the solution? What do you find when you're talking with the mayors of the world?
so the carriers, I think, in general have been receptive. This is a problem that hurts them a lot, right? And ends up in their utilization of their asset. So they deal with, right, depending on the trade, depending on how volatile the industry is at a given time, or import export, between 20-40%, I've heard 90% booking fall down, which is kind of booking cancellation. And I hear those numbers, and as someone who's never managed a trade lane on an ocean carrier, I just am marveled by how they make money
Right.
with the kind of fall down numbers they have. And so it's a real pain for them, right? And that kind of so they have to overbook massively, right? And kind of see how the fall down shakes out, right? And there's a lot of kind of what I've heard called guerrilla sales, basically, to go and find cargo at the very end. So, in every kind of point of utilization for them, right? They have a very high fixed cost business, right? If they're going to sail from Shanghai to LA, like, if there's another 1,000 containers on the vessel, right? That's just pure profit, basically. So it's a huge pain point for them, right? Kind of fall down.
So,
Everyone's essentially,
in layman's terms here, like, if I'm
yeah,
understanding this,
yeah.
basically, the way this is operating is the BCOs book a bunch of space, not even knowing if they're going to use it, but just wanting to have it reserved. And then the carriers, knowing that there's a high risk of cancellation because people are overbooking, just allow a lot of overbookings. Like, they go over what their capacity is actually going to be. And then we just wait to see where that's going to shake out. We wait to see how many people cancel and how many we overbooked, and, like, if we have too many bookings or not enough bookings.
It's a little like that. Yeah. They obviously have historical data they can look at to kind of model out what they think fall down will be and all that. But ultimately, yes. They on the buy side, right? Like, if you're trying to acquire space, and it's important, right? Your space isn't guaranteed, right? So when you go and make a booking, technically, even if you have allocation, right, it's not technically guaranteed. And especially if you need to go right above your kind of flat weekly limit, right, that we talked about earlier.
Sure.
So, the difference in what we're doing is saying you're actually buying an allocation equivalent unit. And importantly, because we're actually separating the space out, right, from the underlying kind of unique carriage terms, if you don't need the space, right, will allow you basically to resell it, right? So another shipper can buy that space and then use it, right, basically with their carriage terms. So, I think as we think about adoption, right, we're, working on kind of getting a pilot off the ground. We've got a, carrier committed and a number of shippers and forwarders who we're, working with kind of moving forward. And I think as I think about it, and it's funny, I think about the same thing when we built the kind of data sharing project at DOT. I always told people, like, it's not a data project, it's a psychology project, right? And what we're proposing is a pretty different way of managing space, right? Of actually pricing it out separately, and managing it that way. So, as we think about, the pilot and getting people on board, it's really about essentially narrowing the scope of the pilot, kind of de-risking it from both parties' standpoint. And I think for now, focus on kind of just the buying and essentially the carrier listing of the space, the shipper or forwarder buying it, and getting used to the idea that actually we're going to buy space separately and manage it that way is kind of the big push.
Yeah. I remember when space-based pricing was new in LTL markets, so less than truckload markets. It was quite disruptive when it first came out. But it's I guess that's more similar than the full truckload market. It's close, but in the less than truckload, you only have so much space on the truck that you're going to send to the next terminal, and so they decided we need people to pay for the space they take up, not just like the weight on the truck,
Yeah.
because space matters too. So, okay. I want to ask about, we have a lot going on right now in international marketplaces. So since I have you here and you've been on a supply chain disruption task force before, I mean, you saw a lot of disruption for sure, but now we have different kinds of challenges and disruptions going on. So wanted to first get your thoughts on just how all the uncertainty right now, geopolitically with the war, just how all of this is affecting ocean logistics. Like how does that show up in a logistics manager's or a ocean carrier's day?
Yeah. I mean, there's the kind of obvious, effect of, cargo not moving in and around the Middle East. And I can't speak to the oil market side as much, but there's kind of obviously impact there, both from a price and just movement of the commodity. Something that, you mentioned TPM, that, was kind of mentioned in the opening remarks at TPM was kind of we're in a state of permanent disruption. So I think, kind of keeping that in mind and just thinking about kind of risk management, and, a lot of what kind of, we think about even with Laneway is basically this as a tool to manage risk and to share risk between parties, right? And I think using the kind of, BAF example, right? Ultimately, what was that? It was a way to share risk. And I think as, geopolitical tensions continue to increase, right? I think finding opportunities for avenues like that are just going to be kind of more and more important.
Sure. Any thoughts on the IEPA decision, and kind of what's next with tariffs? And do you expect that to continue to have impacts, or are we all kind of are we over the tariff headlines?
I mean, I think we're over the 150% tariff headlines. I think just given the kind of laws that are in place that they can use for other tariff kind of structures. It seems to have kind of settled out at least, which is good. I mean, I think how I always thought about this was ultimately you need reliability, right? If we're going to have like a tariff regime that is higher, right? That's a policy decision, right? That we can make as a country. I think the thing that you don't want is for that number to be changing every month. And it does seem that we have at least settled that, right? It's higher, but at least it's not changing regularly. Obviously companies have kind of, I just saw something, it was yesterday before that, like certain essentially segments of commodities or electronics have essentially materially shifted out of China and into Vietnam. So the kind of China plus one strategy that everyone talks about seems to be real. And that I think is both, it cuts both ways. Of one, you're kind of diversifying risk right across origins. It also increases the complexity of your logistics network, right? So I think kind of both of those things are things that I think about.
And then also wanted to know, I guess you kind of just touched on it, the whole, China plus one, but do you think that, I mean, has there been an impact to the ocean carriers? So shippers went out and said, okay, like we want to de-risk supply chains. We're going to change where we're sourcing. Was that enough to really like change where ocean carriers need to have capacity and what ports they're calling more frequently and what their now heavier trade lanes look like?
Yeah, I mean, I can't speak to the kind of inner working specifics, but when I've talked to carriers, right, I had someone explicitly tell me this. Like, the data I wish we had was essentially like future manufacturing activity, right? Because we need to know, right? Our job is to essentially have the right ship in the right place at the right time.
Yeah.
And that's all downstream of manufacturing demand. And so I think it materially impacts how they design their network. And I think that, is information they would love to have.
Which is challenging because obviously the government data we get on manufacturing is lagging. It's already dated. So trying to have, a couple months, few months out in advance is difficult.
Tough. Yeah.
Yeah. Aside from trying to maybe scrape headlines for announcements of investments or whatnot. But yeah, absolutely. Okay. Well, I would like to kind of wrap up, I think, today's episode by asking you to give us some advice. So if you were, able to give one piece of advice to what we call shippers, or you might call BCOs at this time, just in regards to their ocean logistics, what would that advice be?
I'm gonna sound like, I'm repeating myself, but it really is around kind of shared risk management and kind of partnership with your carriers. I mean, my experience, both in my kind of previous life, but also building Laneway, is like, the carriers will be responsive, especially if they hear from their shippers, right? So I would just say, like, obviously we're in a time of kind of uncertainty that's shared, and finding avenues and approaching your carriers with kind of different ideas. I found that they're receptive. So yeah, partnership. And it sounds cliche, but it's kind of the kind of true for me.
It always kind of comes back down to partnerships, I think, right? So, what would you say if the idea of pricing space and allocation management sounds kind of new to someone that's listening, that's managing this? Like, what would you encourage them to do? How can they learn more about that?
You can reach out to me directly. You'd find me on LinkedIn, or just go to the website that's kind of in my name here, laneway.io, and you can reach out that way. Would love to talk to you all if you're interested. As I mentioned, we're kind of getting pilots off the ground now, so would love, if you're an interested party that's listening in, would love to work with you.
Awesome. And you guys can definitely find Andrew on LinkedIn. I think he mentioned that, but give him a follow, keep up with what he has going on there. Send him a message. If you guys are listen back to this on YouTube, on Spotify, anything like that, you can still come find us on LinkedIn or the LinkedIn event and leave a comment, tag Andrew, tag myself. No, not everyone can always make the live shows, so we still like to take questions when we can. So feel free to tag us and ask a question. Any other closing thoughts for us today, Andrew? Anything else to add?
Nothing to add. Just appreciate Samantha, you having me on, and appreciate all of you guys who have tuned in to listen. So that's all I've got.
Absolutely. Well, I appreciate you coming on, and I appreciate the opportunity to, like I said, catch up in a marketplace that I don't get to hear about every day. So that's always fun for me. So thank you for being here. Thank you for lending your expertise on the topic.
Thank you.
And thank you, everyone who was able to join today. We appreciate you for meeting us for coffee.